Mixed performance among the major US stock indices yesterday ahead of today's key risk event, which is the release of the PCE inflation data coupled with the preliminary reading of the University of Michigan Consumer Confidence Sentiment Index for the month of December. What's interesting over here is that the small cap Russell 2000 managed to outperform among the major US stock indices yesterday. The US dollar index managed to stage a modest rally of 0.2%, but still remains below its 50-day moving average, acting as an intermediate resistance. The dollar yen yesterday weakened below the 155 psychological level on rising bets of a potential interest rate hike by Bank of Japan in the up and coming meeting in December. Good morning to all. Welcome back to today's Daily Dose of Market Insights. Kelvin here. Before we kickstart our gist of the Daily Dose, today will be Friday, the 5th of December. Let's have a quick look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, before we jump straight into the full suite of today's Daily Dose, which is I will cover all the intraday technical outlook chart, updated one, in light of tonight, I would say this evening, key US data releases, which are two of them. Later I'll share with you what are these two US data. So before we kickstart into the, I would say the individual intraday technical outlook chart on all the broad-based cross asset classes, let's have a quick look what are the key events or data that has taken shape that managed to shake significant movement on the global markets yesterday. All right, so let me share with you guys the state of the US stock market. So the state of the US stock market yesterday, that's what I call that is a consolidation. So bear in mind that we know that in the last, we call it 2 days from Tuesday and Wednesday, we see a stock market rally. So yesterday was a breather ahead of today's key risk data event, which is the PCE data, as well as the preliminary University of Michigan consumer sentiment data that will be out later during the US session. So I would say that it's more of a healthy consolidation rather than the start of a potential bearish reversal. So later I'll share with you on the charts. Why do I say that? And most importantly over here is that the Russell 2000 managed to outperform. So the Russell 2000 yesterday managed to gain 0.76%. Whereas the Dow Jones and the Nasdaq 100 almost unchanged. The Dow Jones Industrial Average negative 0.07%, the Nasdaq 0.10%, the SPX managed to gain 0.11%. So clearly the reason why, the reason why the Russell 2000 managed to outperform at 0.76% is due to the continuation of the higher, we call it firming up of this probability that next Wednesday on the 10th of December that the Fed will likely do the third interest rate cut by bringing the Fed funds rate down by 25 basis points. How do we see that? Because it's still showing a rising a probability of, I'll say a firm probability of 87% that the Fed funds futures traders has now continued to price in based on whatever relevant news flow and relevant data that the Fed funds futures traders managed to get hold of, because all these are based on the Fed funds futures pricing. All right, how then the CME Fed Watch 2 do the calculation for us. So 87% chance that the Fed funds futures traders are pricing in a continuation of this firmer probability that the Fed will do another 25 basis point cut to bring the Fed funds rate down to 3.5% to 3.75%. So that also explains why the Russell 2000 continues its third, we call it a session of consecutive up move, because the Russell 2000 company, their balance sheets tends to be much more highly leveraged compared to the balance sheet of the companies that are being constituted inside the S&P 500 and the Nasdaq 100. So given a lower interest rate environment, that will potentially benefit the S&P, the Russell 2000 company more compared to the S&P company and compared to the Nasdaq 100 at a certain juncture in time. So, but most importantly yesterday is that if you look at the heat map of the S&P 500, we start to see some of the mega cap technology stocks gaining strength as well. So the NVIDIA managed to show a rosy return of 2.11%, metal up 3.43%, Alphabet Alphabet, Google down negative 0.6%, and Apple down negative 1.2%, Amazon down negative 1.4%. And what's interesting over here is that Metal was the star outperformer among the mega cap technology stock, up 3.4% due to potential productivity gain among a restructuring exercise that may take shape early next year, where there's a news flow coming up from major media reports stating that the top management, which is the CEO himself, Mark Zuckerberg, there's a plan to actually have deep cuts in the metaverse business unit over here. Right, so Meta Platforms, Mark Zuckerberg is expected to cut resources for building the metaverse, and effort he once framed as the future of the company. So due to this potential restructuring, that means there could be cost benefits that could come up for Meta. So that actually explained to us why Meta share price was the top performer yesterday among the mega cap technology stocks, thereby enable the S&P 500 to show a modest gain of 0.11%, despite underperformance from Apple, down negative 1.2%, and Amazon down negative 1.4%. All right, so then another news flow is coming up from the Bank of Japan itself. So I mentioned that yesterday we see a slide on the dollar yen, briefly breaking below the 155 psychological level before bouncing back up in today's Asia session, but still trading below the 20-day moving average. So later I'll touch on more about the short-term, the key adjusted levels to watch out for the dollar yen. So one of the reasons market participant is now taking into consideration is that the BOJ seems to now winning a battle against the current Japanese administration. So what is the story so far? So we know that previously the new Prime Minister Takahashi, she is a mentee of the former Prime Minister Shinzo Abe, and Shinzo Abe has been a very strong advocate of accommodative monetary policy, which the new Prime Minister also supports based on a public statement. So in the last 2 to 3 weeks, there was actually a push by the current Japanese administration to persuade the Bank of Japan to be much more relaxed in its monetary policy. So still remember, since 2 years ago, Bank of Japan is no longer having a accommodative monetary policy. That means from decade plus of zero interest rate in Japan, the Bank of Japan view that now is healthy and it's a time right to actually gradually normalize zero interest rate policy to a positive monetary policy, in a nutshell, indicating that the Japanese economic growth has started to exit from decade plus of a deflationary risk spiral. But in the last few weeks or 2 weeks ago, due to the jawboning by this Bank of Japan, jawboning by the current Japanese administration key officials towards Bank of Japan current gradual interest rate hike monetary policy stance, we see the dollar yen spiking upwards, almost went up as high as 158, then going up to the psychological level 160. So now it's back down by about 5 big figure. So yesterday news flow stating that there are actually key members of the current Prime Minister Takahashi government wouldn't try to stop the Bank of Japan if it decides to rise interest rate in December, according to people familiar with the matter over here. So what we could see over here is that previously at this start of this week on Monday, during a business forum, BOJ Governor Uda also mentioned that the bank will consider whether to rise interest rate at the upcoming meeting, a phrase seen as a clear signal that a rate cut hike is strongly a possibility. So if we were to look at over here, if they would actually raise interest rate, so this will be the second time this year. So they raised interest rate at the start of this year to 0.5%. So this time around, if they would raise it on the 19th of December meeting, the BOJ short-term overnight policy rate will be at 0.75%. So this will happen. The yen strengthened against the dollar and briefly broke below the 155 psychological level, hit an intraday low of 15477 before rebounding back up in today's Asia session. And what we could see over here is that if you look down over here, so based on the latest on Thursday, yesterday, there's this overnight index swaps. So overnight index swaps can be used as an indication, something like a Fed fund futures, because they do not have a BOJ short-term overnight interest rate futures contract. All right, so there's not exchange traded. So to gauge a probability whether BOJ will hike, hold, or even cut rates, they will look at the OTC overnight index swaps, which is not easily available because those are OTC market rather than the Fed funds futures market, which is based on exchange traded market. So based on this OTC overnight index swaps, on the bets that is being placed by OTC traders or the swaps traders, they're showing a 87% likelihood of a move this month. That means 87% likelihood, almost the same as the Fed, but the Fed is cutting. So now it's 87% likelihood that the BOJ may hike on 19th of on the December meeting, compared to only 58% chance at the end of last week. So that also explained to us, reinforcing the technical weakness on the dollar yen that we start to see since late last week. All right. So if you look at the 5-day rolling performance of the US dollar against other major currency as of 5th of December right now, right, we continue to see the dollar trend weakening, and only during the I would say that the start of the US session, there's a slight bounce yesterday. So if you look at the US dollar index very quickly, yes, there was a bounce, all right, yesterday, but this bounce did manage to surpass above the first resistance level at 99.25. That was previously the first support taken down on Wednesday. So yesterday bounce also managed to cap below the 20-day, the 50-day moving average. Pardon me, not the 20-day, the 50-day moving average. So what I could see over here is that the dollar index continues to remain lackluster, still trading below the 50-day moving average, the 20-day moving average, and as well as the key 200-day moving average. All right. So net overall lackluster showing of the US dollar index. Definitely ahead of today's key risk data, which is the PCE data from US, and as well as the University of Michigan consumer sentiment data. So next support level to watch will be 98.67. So a breakdown below it potentially take us down lower to the 98.03. So net overall is still trading in this complex sideways range configuration over here. So what it did is a bearish reversal at the upper limit of this sideways range at 100.54. Potentially, if it breaks below 98.67, it could start to float down towards the middle part of the sideways range first, before going down to the key support of this sideways range configuration at 96.55 that managed to survive on the 1st of July and the 17th of September this year. Right. So now that covers the first segment of the daily dose. So let me now move on to the second segment of the daily dose, which is the intraday technical outlook on all the major cross asset classes that we cover on a frequent basis. So before that, let me expand my screen so that you guys have a better view of the charts. All right. So let's start with the FX market first. Okay, starting with the euro dollar. Okay, still recall that euro dollar yesterday we do cautious of a pullback over here. So the pullback indeed takes shape right below the 101.1675 intermediate resistance level. So yesterday we do have a tighten pivotal support at 116.50. So I'll be still using this 116.50 as my level to watch over here. So what we could see is that the RSI continues to slide. So at the moment in time, he hasn't hit the oversold level yet. So there could be still a bit of residual pullback that may take shape during the European session and also ahead of the key risk event, or even during at the release of the key risk event, which is the the US PCE price data. So later I'll share with you what will be the timing of that key data. Two of them. All right, so any potential pullback over here, as long as it didn't slide below 116.15, I'll be on lookout for any shorter term bullish reversal candlestick to flip my honors to have maintained that bullish bias since yesterday, given that the price action still continues to trade above the 50-day moving average and above the 20-day moving average. And if you were to do a short-term ascending trend line, taking from the low of that second double bottom formation. So recall that previously there was a double bottom formation form, price action move up higher. Right, so this minor ascending trend line that managed to link the prior key higher low, it also confluence exactly at the 116.15 short-term pivotal support level, giving it a credence to be a very key inflection level as it managed to get defined by different technical elements over here. So 116.15 key pivotal short-term support remains the same as long as any minor residual pullback didn't surpass below 116.15, we'll still maintain that bullish bias. First resistance level to watch for sure will be yesterday intermediate resistance level where the bulls got rejected and shaped that minor pullback. 116.75 above 116.75, potentially seek out the next intermediate resistance level at 117.20, which is the 1.236 Fibo extension of the first double bottom low from 6th of November, and so confluence with the graphical minor swing high area of 6th of October as well as 17th of October over here. All right. Next will be the sterling dollar. All right, so the sterling dollar also managed to shape that minor pullback, right, after hitting the first intermediate resistance level, which I highlighted as well, 133.70, which was hit on exactly at the start of the US session. So potentially there could be some form of residual minor pullback, given the fact that the RSI hasn't come close to the oversold level. So as long as this minor pullback managed to hold maximum 132.70, first pullback support level to watch will be at 132.95 over here. So 132.70 will be my short-term pivotal support. That also confluence with the 50-day moving average. Still maintain that bullish bias on the sterling dollar above 133.70. First resistance to watch will come to allow the next intermediate resistance to come in at 134.15 / 134.50, which is the 2-time Fibo extension from the first double bottom low of 5th of November. Confluence with the minor swing high of 17th of October over here. Only a bearish breakdown below 132.70 that would invalidate today's bullish bias view on the sterling dollar to see a deeper corrective pullback to retest the 20-day moving average, confluencing with the minor swing low of 3rd of December, acting as the next intermediate support level at 131.80. So that will be the sterling dollar. Next up will be the Asia Pacific currency, starting with the Australia dollar first. So the Australian dollar also managed to trade a minor pullback, okay, slightly only a minor pullback below that key 66.20, 66.30 resistance level. So this is considered as a major resistance level. Why? Because if you go to the the daily chart, pardon me, the daily chart over here. So the daily chart 66.30 over here represents the long-term circular descending trend line from the 25th of February 2021 high. So that was more than close to 4 years plus back, or exactly 4 years ago. Long-term circular descending trend lines that previously kept all the significant rebound. So the last time it managed to get rejected was on the 17th of September, and in yesterday it tested and got rejected again. But what we could see over here is that this time around, the daily RSI, where it got rejected, it hasn't come close to the overbought level yet. Whereas previously, the last time around, it got rejected on the 17th of September, it came to the overbought level. All right, so this time around, the overbought level has not been met. So indicating that potentially there could be enough ammo to allow the Aussie dollar to break up above the 66.30, all right, in the coming days ahead. But however, if you look at the hourly time frame chart over here, there's risk of it shaping a pullback first before doing that potential major bullish breakout in the coming days ahead. So what it means that if you look at it from a multi time frame perspective, the daily time frame chart is showing bullish momentum. The daily RSI hasn't hit the overbought level yet. All right, no overbought level, but previously when it touched the major long-term circular descending trend line on the 16th of September, the daily RSI hit the overbought. So that actually potentially also explain why it did that multi-month corrective pullback within this parallel asset, within this what I call expanding wedge configuration that has taken shape since 24th of April this year. But this time around, the RSI hasn't hit the overbought level. So indicating that there could be still ammo to allow the Aussie dollar to break past the 630. But on the shorter term time frame, there could be a pullback first before breaking above 66.30. Right. So why do I say that? Because I were to look at the hourly RSI. So if you look at the hourly RSI over here, there's actually some kind of bearish divergence. Right, there's a bearish divergence. Okay, you notice that price action hit a higher high yesterday, touching the 66.30 major resistance. bearish divergence and starts to shape a lower high over here. There's a lower high. And if you were to look at the RSI connecting previously here, there's potentially on support, but because of this lower high, there's a risk that this support might get broken to the downside, all right, over here. So given said that, there could be a risk that we may see a minor pullback taking shape first. So minor pullback key support level, because over here there is no significant key support, all the way from what 65, what 95, all the way up to what 66 figure level. The next key support level will be 65.80, which is the former minor swing high of 13th of November. Why is this key? Because after hitting 13th of November minus swing high, you notice that the price action starts to shape a significant intraday decline, all right, before hitting the expanding wedge range support, then bouncing up for this recovery. So definitely there's a key sentiment value to it at this former 13th of November minus swing high now turns into a critical pullback support level. So because of a key risk event today, I don't want to put it exactly at 65.80. I put it slightly lower at 65.55, which is also this this long tail candlestick low on the 3rd of December that is being formed at 8 a.m. Singapore time at that point in time, in line with this clear congestion area previously on 2nd of December and 3rd of December. And if we do the Fibo retracement of this entire recovery from the low of 21st of November all the way up to yesterday's high, it consumed very closely to the 38.2% Fibo retracement. Right. So two key support level to watch as the Aussie dollar shape a potential minor pullback, 65.80, maximum 65.55. So thereafter, once it comes close into this zone, I will still maintain that bullish bias view, given the fact that the daily chart still remains bullish. So it's more like a pullback first before another uplift taking shape potentially for the Aussie dollar, using these two key support level to watch. First support level 65.80, pivotal short-term support level 65.55 still remains the same. Then thereafter, above 66.30 may take us up potentially to the next intermediate resistance level at the 66.60 level in the first step, which is the minor congestion area here of 16th of September and 18th of September. Only a bearish breakdown below 65.55, pardon me, only a bearish breakdown below 65.55, that would potentially see a deeper retracement to retrace back towards the 50-day and the 20-day moving average, converging with the next two intermediate support area at 65.37/65.20. So that will be the Aussie dollar. Okay, next up will be the dollar yen over here. So the dollar yen yesterday plummeted lower over here and almost hit the next support level at 154.40. So printed a low of 154.52. All right. So right now the RSI managed to stage a bounce as well, but where it bounced over here, okay, it bounced. There is no bullish divergence. Right, no bullish divergence. Price action still continues to inch downwards. Okay, similar with the raw price action on the on the dollar yen. So given the fact that there is a risk event taking shape, I would not want to tighten my pivotal resistance, pardon me. I don't want to tighten my pivotal resistance to 155.50 over here, which where it get rejected off the 20-day moving average. All right. So just in case of any whipsaw that may take shape, that means a long tail candlestick before floating downwards, I will still use a same pivotal resistance level over here due to the release of the key risk event that is taking shape today, 155.95/156.18. As long as this 155.95/156.18 is not surpassed to the upside, we'll still be using to fake that strength to maintain that bearish bias on the dollar yen. First support level 154.40 for sure. A breakdown below it exposes 153.80/153.60. Only a bullish breakout above 155.95/156.18 that would invalidate today's bearish bias view on the dollar yen to see a squeeze up towards 156.60. Above 156.60, potentially see a further rebound back to retest the 25th of November minus swing high area at 157.15 next. Right, so that's cover the four major dollar pair. So let us now proceed to the major stock indices. starting with the Hong Kong 33 over here. So the Hong Kong 33, what you could see is that yesterday we were neutral, all right, we turned neutral. So it hit the first resistance level before trading downwards again, all right, before trading downwards. So what we could see over here is that since it's Friday, right, and it's still trading below the 20 and the 50-day moving average, can't surpass above it, I will still maintain a neutrality stance for today on the Hong Kong 33, given that I don't have any trend conviction right now. Yesterday, it can't break below because of the RSI shaping a bullish divergence, hit the resistance, but after hitting the resistance, we start to see lackluster price trading action. Seems to us that there's still some form of stubborn resistance below the 20-day and the 50-day moving average, but at the bottom, price action still remains supported. So I will have a rather tight neutrality range today since it's Friday over here as well. So I don't neutral between the upper limit, a new upper limit at 26,010, and the lower limit will be at this level here. Let me remove all this. Okay, so this will be the next support instead. Oops, sorry. Let me delete this. Okay, so this will be the new neutrality range, 25,660. Okay, so flip to a neutrality stance between 26,010 and 25,660 for today on the Hong Kong 33. So only a bullish breakout above 26,010, potentially see a retest towards the next intermediate resistance level, where the price action can't surpass since 2nd of December, which is at 26,275, 26,310 level. So that's for the Hong Kong 33. Next up will be the Japanese 225 or the Japan 225, pardon me, representing the Nikkei 225. So the Nikkei 225 indeed play around our first resistance level, 50,730, before shaping that pullback over here. So right now it's actually fast approaching a parallel ascending trend line as well, taken from the oversold level previously on the hourly RSI. All right, and also back towards our pivotal support level, which is the 20-day moving average as well over here. So with that, I will still maintain that bullish bias on the Japan 225s, but I will adjust slightly the first resistance level to be yesterday's minor swing high area during the European session at 50,985. Right, so still maintain that bullish bias on the Japan 225 using my pivotal support level, where the price action managed to shape the expected pullback and now trading exactly right, a whisker above it only, with the RSI coming close to support as well. 50,150 / 49,960 short-term pivotal support level. Still maintain that bullish bias. Adjusted first resistance level to watch for today will be yesterday's European session minor swing high area at 50,985. Above 50,985, potentially see the next intermediate resistance coming in at 51,530, where previous bulls got rejected on 4th of November and 13th of November. Only a bearish breakdown below 49,960, which is the 20-day moving average, that would negate today bullish bias to see a deeper corrective pullback to retest the 50-day moving average, confluencing with the minor swing low of 1st of December this Monday, and as well as the medium-term ascending channel support, linking the lows since 7th of April 2025, coming in all at 49,085. So this will be the next support level to watch if 49,960 gets taken out on the downside. So that's for the Japan 225. Next will be the Germany 30, representing the German DAX. So the German 30 managed to float upwards on a very gentle upward drift, now into the intermediate resistance zone. All right, so now it's actually hit the intermediate resistance zone, the upper limit at 93,960. All right, so given that it hasn't broken above 93,960, I do not want to tighten my pivotal support to be all the way up to 23,480 just in case of any nasty whipsaw again, because previously the Germany 30 represents a lot of nasty whipsaw in the last 2 weeks. So still using that 23,480 as my short-term pivotal support, where the nasty whipsaw managed to store around at the 26th of November minus swing low, and as well as this Monday minus swing low area. So first support level to watch out for today will be this congestion area here. All right, which is at 23,810. We're so confident with the lower limit of this ongoing minor ascent channel from the support from the low of 21st of November. So next resistance level to watch after 23,960 will be at 24,140 on the intraday basis. However, if price action managed to clear above 23,960, then I will tighten my pivotal support to 23,670. So if we start to see a price reversal back below 23,480, that means for sure it has really cleared below the 200-day moving average as well. That means we are in line for another choppy price action for the Germany 30 in first step to see further weakness to test 23,370 followed by 23,150 next. So that's for the Germany 30. Onward next will be the major US stock indices, starting with the US Wall Street 30. So US Wall Street 30 yesterday at the start of the US session hit the first resistance level, can't break and just traded sideways, but managed to find support exactly at our first support level at 47,754, this level here, all right, which we highlighted yesterday before shaping a minor bounce and traded in a very small little candlestick throughout the Asia session today. All right, so likely it's a consolidation pattern in light of the key risk event or key economic data released today, which is the US PCE and the University of Michigan Consumer Sentiment. So still no change, given that it can't break above 48,000. I don't want to tighten my pivotal support to 47,750. So I'll still use the same pivotal support at 47,560 to maintain this ongoing bullish biasness as the price action continues to oscillate within this minor ascending trend line from the low of 24th of November. Next resistance to watch after 48,000 will be the current all-time high area at 48,450. Be so confluence with the 0.618 FIBO extension on this ongoing recovery from the low of 21st of November. Only a bearish breakdown below 46,560 will negate today's bullish bias tone to see a deeper minor corrective pullback to do a deeper retracement to retest the 20-day moving average, acting as the next intermediate support level at 47,180. All right, so that's for the US Wall Street 30 representing the Dow Jones Industrial Average. Next up will be the S&P 500 over here. So the S&P 500 also tests our first support level, 6850 level around this region before shaping a U-turn over here during the close of the US session. All right. So right now in the Asia session, it's fast approaching this 6,880 level. So as long as it didn't break above 6,880 level, let me do a bit of adjustment over here. Okay, taking into account the body. Okay, first support level to watch will be around the 6,843 level or 6,840. So if we break above 6,880, then I will tighten my pivotal support level to 6,840 next. So for now, the pivotal support still remains the same at 6,880. So next resistance level to watch will be at the current all-time high area at 6,930. All right, over here for the US SPX 500. Only a bearish breakdown below 6,800 will see a deeper pullback towards 6,780/6,760, which is a very key support level as well over here in terms of moving average, because it's confluence with the 20-day and the 50-day moving average. Only a breakdown below 6,760 will constitute a deeper pullback towards 6,710 level in the first step. Right, so that's for the SPX 500. Next up will be the NASDAQ 100 over here. So the NASDAQ 100 continues to manage to stage a bounce as well from our first support level that we have yesterday, 25,455, pardon me. So still can't break above our first resistance at 25,760 as it continues to end road above this level over here. But the RSI continues to show promising sign because the RSI right now during the Asia session is doing a bullish breakout right over here. Okay, so given the fact that of this bullish breakout, there's a higher probability that 25,760 may take out on the upside. All right, but unless it start to take out on the upside in the real price action on the price action of the NASDAQ 100, then I will tighten my pivotal support to 25,455. All right, so right now pivotal support area, short-term pivotal support area still lines at 25,305, 25,185 for now. So unless we see a bullish breakout above 25,760, we will tighten the pivotal support level to 25,455. But promising sign is will be there's a bullish break, there's a pre-signal bullish breakout coming from the hourly RSI. Next resistance level to watch will be 26,070, which is the 1.382 Fibo extension of this ongoing recovery from 21st of November minus low, and 26,070 also confluence with the minus swing high area of 3rd of November. Above 26,070 exposes the current all-time high area at 26,290 that was reached on 30th of October. Only a bearish breakdown below 25,185 will invalidate today's bullish bias view to see a deeper minor corrective pullback to test 24,920. So 24,920 also the former descending trendline resistance from the current all-time high of 30th of October, taken out on the bullish breakout on 26th of November, now turns into a pullback support around 24,920. So that's for the Nasdaq 100, still maintaining that bullish bias. So that sum up all the intraday technical outlook on the major stock indices. Let's have a quick look at the commodities market, starting with gold, XAU/USD. So gold continues to trade in the sideways range. Yesterday played around our first support level 4,190, but still holding above 4,150 key short-term pivotal support, which now confluence with the rising 20-day moving average. So no change, still using the 4,150 as my short-term pivotal support. First resistance level to watch will be the high that was seen on 1st of December 4,267, which also correspond to the 0.764 Fibo extension of the low of 28th of October, and 0.764 Fibo retracement of that previous decline from 20th of October high to 20th of October all-time high to 28th of October swing low. All right, so constitute this 4,267. So this 4,267 seems to a very key inflection level where price action indeed got rejected on 1st of December. So still maintain that bullish bias, but it got to surpass above 4,267 in order to gain much more pronounced bullish momentum coming into gold for allow it to see a higher high to test the next intermediate resistance level at 4,340 below the current all-time high at 4,380. Only a bearish breakdown below 4,150 that would invalidate today's bullish bias view to push up towards the first resistance at 4,267 to see it floating downwards towards 4,105. Maximum 4,038, which is the key minor support area where price action managed to survive on the 20th of November to 24th of November. So that's for gold, XAU/USD. Next up will be the West Texas crude oil. So the West Texas oil also in a choppy sideways range configuration. Price action bounce hit our first resistance zone before retracing downwards during the start of the Asia session today. All right, so 60.10 60.40 is indeed a key short-term pivotal resistance level. So I'll still use this pivotal resistance level to maintain that bearish bias view within this choppy minor sideways range configuration that now starts to form from the low of 21st of November. So first support level to watch out for today on the intraday basis will be very clearly this minor swing low area here that's being formed at Wednesday US session, and as well as yesterday start of the US session low, all right, at 58.94, right, 58.94. I put it right in 58.94. All right, a breakdown below 58.94 will potentially expose 58.35, which is potentially the current low at the start of this week. So a breakdown below 58.35 will potentially see the minor swing low or the minor sideways range configuration from 21st of November being exposed at 57.54, 57.31. Only a bullish breakout above 60.40 that will invalidate the sideways bearish bias view to see a squeeze up towards 61.30/61.70, which is the minor swing high area of 3rd of November and 12th of November, and so confluence with this descending trendline resistance that I drew from the high of 31st of July, linking to the lower high of 29th of September, that is now acting as also a resistance level at the 61.30, 61.70 resistance area. All right, so that's for the West Texas oil, and that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic data. What are the two key risk data that we need to take note of for today that may cause volatile movement across the market, which will be in the US session. But prior to that, let me have a quick look. Is there any other tier 2 data to take note of as well during the European session? So during the European session, it's rather quiet, not much data to be taken note of. So unless for those who are really interested in the dollar CAD and the Canada crosses, we do have tier 1 Canada data, which is the job labor market data, which is the unemployment rate and the unemployment change data for Canada. That's out at 9:30 p.m. Singapore time. And this is the key risk data, which is the core PCE price index. So this is the delayed data for September, but it will still has an impact because given the fact that the Fed tends to watch this data very closely. So this core PCE price data, market participant will looking at the core prices, which is year-on-year prices over here, stripping out the volatile energy and food components. So the core PC price that remains rather sticky at 2.9%, but market is penciling also a same rate of growth at 2.9% from the previous month of August. So as long as it still remains below 2.9%, not striking up to above 3%, potentially I still reckon that the Fed funds futures pricing will still remains rather firm at around the 80%. 80% above the 80% level. So next up over here on the economic calendar will be the University of Michigan Consumer Sentiment Index for the month of December. So that also will come out exactly at 11 p.m. Singapore time. So both will come out at the same time together. So this consumer sentiment index over here is still continues to remain rather weak at 52. So market is expecting 52. Previously it was at 51. So if you look at the trend, it's still trending downwards over here. All right. So you look at the trend, it's still trending downwards since July this year. So even though it's at 52, it can't break above the 53.6 level it was in October. So with this lackluster trend of the University of Michigan sentiment, that will also potentially cement that high chance of an interest rate cut on the 10th of December. So if it comes down way below expectation, so give me a minute over here. So let's say if it comes down way below 50, where is it? Sorry. Yeah, so if it comes down way below 52 and below 51 that was printed in the previous month, November, let's say came in at 50, that would potentially increase the interest rate cuts bets for 2026. All right, so for now, for 2026, if you look at the aggregated tab over here from the CME Fed Watch 2, it still continues to show 3 interest rate cuts are coming in. All right, over here. Okay, 1 second. Okay, so this is 87. December. So next time, the next cut will come in on the 29th of April next year, 77% chance to bring it down to 3.25% to 3.5%. Then thereafter, 61% chance to come in at July. So if you don't come in at July, it will be at September over here. Then thereafter, the price continues, the odds continue to remains high at the 3% level to 3.25% level. Then the last meeting, 9th of September. So market is still expecting to be at 3% to 3.25%. So now, based on the latest pricing odds, the market is now pricing at least a minimum only 2 cuts coming in on 2026, right? Based on the probability right now. So in order to go back up to 3 cuts that was being priced in at the start to the middle of this week, the core PCE, no, the core PCE price index cannot be too high. And most importantly, the University of Michigan sentiment data got to be coming in way below expectation. That means below 52. So if that's what to happen, that could potentially see a continuation decline of the US dollar, and also with added liquidity coming into the market next year, that could also continues to reinforce this ongoing bullish sentiment that is being seen on the major US stock indices, and potentially spreading throughout the other major stock indices globally as well. So I'm Kelvin here. That will sum up today's daily dose of market insights with 2 key risk events to take note of at 11 p.m. Singapore time today. the core PC price index, as well as the University of Michigan preliminary consumer sentiment data, pardon me, for December. I wish you guys a great weekend ahead and a restful weekend, and we shall speak again on Monday. Thank you.